Okay, we are doing calculation of depreciation under straight line method. When we are talking about straight line method, what does that mean? When we talk about straight line method of depreciation, what does that mean? Straight line method of depreciation. It means I will calculate depreciation on the cost. When I'm talking about straight line method of depreciation, depreciation is calculated on the cost of the asset. Okay, first thing. Second thing is that the amount of depreciation that is charged every year is always going to remain the same. Same amount is charged on the cost. I'm repeating, same amount is charged on the cost, and it is also called the fixed installment method. What is it called? Fixed installment method. So how do you charge a depreciation in the straight line method? There is a formula that you use to chart depreciation under the straight line method. I'm talking about the amount of depreciation that is charged. When I'm talking about the amount of depreciation that is charged, it would be the cost of the asset minus the residual value. What do you mean by residual value? The scrap value. What is it? The scrap value. What is the scrap value? When you sell your asset, the money that you will get after selling the asset is called the scrap value. So cost minus the residual value divided by estimated useful life. What is estimated useful life? The number of years your asset will last will give you depreciation. Just keep this in mind. Straight line method, fixed installment method, depreciation is charged on cost. We'll read the first question. Kavita's financial year is ending on 30th of June. She is purchasing a fixed asset costing how much? 25,000. So there is a fixture whose cost is 25,000 and she has paid money for it by check. She estimates that she will be able to use the fixtures for 4 years. That means she can use this for 4 years and she is able to sell them for 3,000. Calculate the amount of annual depreciation charge. I'm giving you 2 minutes. Try to calculate annual depreciation charge for me. In straight line method, when they ask you to calculate the amount of depreciation, you would say your depreciation is nothing but your cost minus your scrap value upon estimated useful life. When I am talking about the scrap value, what does this mean? The amount at which you can sell. Scrap value means what? Amount at which you can sell. Okay, so the amount at which you can sell is scrap value. It is also called the residual value. Okay, what is it called? Residual value. Someone tell me in this Kavita sum, what is the cost of your asset? 25,000. I can sell it for how much? I can sell it for 3,000. An estimated useful life. That is for how many years I can use it? I can use it for 4 years. So estimated useful life is how much? 4 years. So the depreciation would be how much? 25,000 minus 3,000 divided by 4. So it is how much? 5,500. So you will write $5,500. This is the depreciation. I'm repeating. This is the depreciation per year. In straight line method, amount of depreciation remains same, remains fixed, remains same, remains fixed every year. Are you with me? Come on. Now, depreciation as a percentage. This is very easy. If I am talking about depreciation as a percentage, you should know the formula. What is the formula for depreciation as a percentage? It is depreciation over the cost of the asset into 100. Depreciation as a percentage. Depreciation over the cost into 100. Can you tell me the depreciation per year? 5,500. What is the cost of the asset? 25,000. Yeah, into 100. So when I do this and I put this on the calculator, you will get depreciation percentage as 22%. Are you with me? Now the most important thing when you're doing depreciation in any sum, we are just building the basics. This table is very important. This is called the table for charging depreciation. What is this called? Table for charging depreciation. Remember, depreciation is charged every year. Are you with me? What did I say? Depreciation is charged every year. That means every year you will charge depreciation. You will reduce the value of asset. Every year I'm going to charge depreciation. I will reduce the value of the asset. What is the cost of my asset? 25,000. When I am charging depreciation, can you tell me what is the depreciation per year? 5,500 is the depreciation per year. So costs minus depreciation, I'm reducing the value. I will get what? Net book value. Cost minus depreciation gives me net book value. Net book value is called the reduced value. So the cost minus depreciation net book value, it comes up to how much? Can you tell me? 25,000 minus 5,500 is how much? 19,500. So it is 19,500. Okay. What is it? 19,500. In my year two, my asset account starts with the net book value because I've already reduced depreciation. So in my year two, my asset account will start with 19,500. Can you tell me the depreciation for year two? It is straight line method. It is fixed installment method. So depreciation will remain the same. I will minus 5,500. So what will become the net book value? 14,000 will become the net book value. Year 3, what is the value of my asset? 14,000. What is the value of my asset? 14,000. So I will bring 14,000 down. What is the depreciation of the asset? I will minus 5,500. What will become the net book value? 8,000. That means written down value minus depreciation again gives me the net book value. Come on. In the year 4, what is the book value of my asset? 8,500. What is the depreciation fourth year? 5,500. What is the net book value? 3,000. So if you see, In the straight line method, the amount of depreciation per year remains same. In the straight line method, amount of depreciation per year remains the same. Okay? Every year, 5,500 is my depreciation expense. Cost of the asset is how much? Now I'm doing something very important. Cost of the asset is how much? 25,000. At the end of year 4, if I have to find the net book value, I am repeating, at the end of year 4, if I have to find the net book value, what will I do? Costs minus accumulated depreciation. What is accumulated depreciation? Accumulated depreciation is total depreciation charged to date. Can you tell me the total depreciation charged to date? This, the total of all this. The total of all this. How much? 22,000 is the total depreciation charge to date. So 25,000 minus 22,000, the net book value at the end of year 4 is 3,000. I want you to solve this sum. Solve how you come at the depreciation. Write it. Do it 2-3 times so that you get a hang of it. And then go to question number 2 and question number 3. Okay, I'm waiting. So for this sum, I told you, can you tell me what is the cost of the asset? So for this sum, we had said that the cost of the asset is how much? The cost of the asset is 25,000. Okay. I'm saying at the end of year 4, at the end of year 4, how much is the total depreciation that has been charged on this asset? At the end of year 4, the total depreciation that has been charged on this asset is how much? 22,000. 22,000 is total depreciation of this asset. The net book value of the asset is how much? What is the net book value? 3,000. What is the net book value? 3,000. If I tell you that I am selling the asset, selling price of the asset is 8,000. What is the selling price of the asset? 8,000. So if I tell you that the selling price of this asset is 8,000, can you tell me net book value is how much? Net book value of the asset is how much? 3,000. Net book value of the asset is how much? Selling price of the asset is how much? 8,000. Selling price of the asset is how much? If I tell you that an asset which has a net book value of 3,000 is sold for 8,000, can you tell me the profit or loss on sale of asset? Can you tell me the profit or loss on sale of asset? I'm telling you an asset whose net book value at the end of year 4, at the end of year 4 is 3,000, is sold for 8,000. Can you give me the profit or loss on sale of asset? Profit is asset of 3,000 sold for 8,000. Asset of 3,000 sold for 8,000. I'm repeating again. Asset of 3,000 sold for 8,000. So I have a profit on sale. How much? 5,000. So I have a profit on sale of asset 5,000. If I say The profit on sale of asset is 5,000. Profit means nominal. Profit means, what is the rule for nominal account? Debit all expenses and losses. Debit all expenses and losses and credit all income and gain. And credit all income and gain. So I would say the profit on sale of asset is 5,000. That means it is credit. That means income statement should be credit. Income statement should be credit by how much? 5,000. Are you with me? Okay. Now I want you to go on this second question. What I want you to read, calculate the annual depreciation charge under the original cost method for me. Then calculate the net book value of asset for me from year 1 to year 4. Third thing I want you to calculate is calculate accumulated depreciation at the end of year 4 and calculate net book value at the end of year 4. Also calculate profit or loss on sale of asset. Calculate profit or loss on sale of asset if asset is sold for 4,500. Come on, tell me. Do this, pause the video, do this by yourself. Start. So the first thing that you have to check is the annual depreciation under original cost method. When they ask you to do so, you will write the formula. Annual depreciation is equal to costs minus residual value or scrap value divided by estimated useful life. What is the cost of the asset is 50,000. Estimated residual value is 10,000. Estimated useful life is 5. So annual depreciation is 40,000 over 5. It is how much? It is $8,000 per year. First thing, you all have done this wrong. Are you with me? Are you all with me? Annual depreciation is $8,000 per year. Now I will go at the table where I need to find out what net book value from year 1 to year 4. So what will I put? I will put year, then cost or net book value, depreciation, and then what? Net book value. Year 1, cost is 50,000. Depreciation per year is 8,000. Cost minus depreciation gives me net book value of how much? 42,000. This is net book value at the end of year 1. Are you with me? Year 2. Net book value is how much? 42,000. Depreciation for year 2? 8,000, because it is straight line method, fixed installment method. Net book value at the end of year 4 to 34,000. I will go to my year 3. Net book value is depreciation for year 3. Net book value at the end of year 3, 26,000. I'll go to year 4. Net book value at the start of year 4 is 26,000. Depreciation for year 4 is 8,000. Net book value at the end of year 4 is 18,000. This is the net book value at the end of year 4. Are you with me? So I have calculated net book value from year 1 to year 4. Year 1, year 2, year 3, year 4. Are you with me? Calculate the accumulated depreciation at the end of year 4. So at the end of year 4, what is the accumulated depreciation or depreciation to date? You will add all of this. You will get accumulated depreciation at the end of year 4, which is 32,000. Calculate the net book value at the end of year 4. Net book value at the end of year 4 is 18,000. Profit or loss on sale of asset. If asset is sold for 4,500. Net book value of asset is how much? 18,000. It is sold for how much? It is sold for 4,500. An asset whose value is 18,000 is sold for 4,500. That means the value is more. I'm selling it for less. That means I have what? A loss on sale. I have a loss on sale of how much? 18,000 minus 4,500. So it is 13,500 is my loss on sale. If I have a loss on sale, so income statement debit or credit? Debit all expenses and losses, credit all income and gain. So income statement will be debit. I hope you are with me. Okay. Now the same thing I want you to do for the next question. Please be mindful that the rate of depreciation is already given to us. I want you to calculate net book value from year 1 to year 4, accumulated depreciation at the end of year 4, net book value at the end of year 4, and profit or loss on sale if the asset is sold for 4,500. Come on, do